Good afternoon, Bob Dalton coming to you from Allendale's trading floor here in McHenry, Illinois. It is Monday, December 13th, 2010. We were all anxiously awaiting to hear whether or not China was going to increase interest rates as the trade was expecting fully on Friday to hear occur over the weekend. Woke up this morning, found out they did not do anything as far as interest rate changes are concerned over there, and our dollar consequently sold off. We saw commodities spring to life off of the bulls coming back in. No news was bullish news this weekend on the commodity front, and specifically in the dollar. So with the dollar falling on back, we did see grains come to life. Today, corn finishing up 14 and a quarter, 588 and a half. 580 is where our resistance was. So we closed and settled up above that 580. That's now going to be our support in the March contract. Looking for a run above 590 and possibly testing $6 here tomorrow if we continue to see the dollar pull on back. Soybeans up 29.5 today in January. 1302.5 is where they finished up. You got resistance up at 1307. We didn't get too much better than 1304 today on the board. We'll see if we can take out that 1307 overnight. And Allendale, we're looking for that soybean contract to make a run up towards 1375 here in the near term. So this is a good start for that type of a run. Wheat up only 4 3/4 today. 780 and a quarter here in Chicago, March. It appeared this morning that we were seeing the wheat actually be spread against the corn. They were buying corn, selling wheat as we were watching one take off. The other one was pulling back off of its highs. So keep an eye on those two commodities. When you see one of them springing to life and the other one pulling back, more likely than not you are watching a spread occur. And they're concentrating the spread primarily in the winter wheat, the Chicago and Kansas City wheat markets. Not too much of that type of trade seen in the Minneapolis wheat today, although Minneapolis finished off of its highs as well, but apparently for different reasons. Specifically, the May contract I'm watching in Minneapolis went up, tested the contract high, and the very next bid was about 3 cents lower. So they went up, hit the high again, and pulled it on back. As we've seen commonly here in all wheat markets, whenever they make a run up to either new highs or testing a contract high, in the same day, if not the very next day, they do seem to pull the wheat contracts back a little bit. So just be cautious if you're looking to buy wheat up near these highs. Make sure you're ready to take a day or two of losses before you should expect any type of return at the highs. That's just what we've seen here this year in the wheat. The dollar right now down 83.5 points after being down over 100 near its lows here today. We're at 79.62. We do have some support in that contract. March contract now, the nearby, or what was nearby today, is off the board. March contract, 79.62. Support coming in right around 79.50. So if we can hold that 79.50, maybe the grains and commodities overall will level off a little bit for us tomorrow. Otherwise, we take out that 79.50, expect to see additional buying in commodities. Crude oil benefiting today from the weaker dollar as well. Up 70 right now at 88.49 in the electronic market. You got support down there around 87-ish. We did take out 88 for a period of time this morning, but it didn't take too long for them to get it back up above $88. Long term, you do have some analysts out there looking for $100 crude. That's not too far-fetched anymore. So keep an eye on that crude oil, 87 support. We put a couple of trade recommendations out today in our research meeting. That'll be available to subscribers here this afternoon in a little bit. If you don't subscribe, call in. We'll get you set up. Otherwise, you can go to the website, www.allendale-inc.com, and go ahead and get yourself registered online. Over to the livestock, cattle, of course, enjoying the fact that the dollar was down and the outright commodity buying today. We had fat cattle up $1 at 101.95 in the pits here today. Feeders up 102.5 at 119.20, and hogs up 117.5 in that Feb contract, 76.32.5 where the hogs finished on up. And again, Rich Nelson went into some very good analysis of the livestock markets today, talking about feed and the dollar and world demand and what have you on our research meeting. So again, pay close attention to that. Those of you who subscribe, that information will be available shortly for you. Also, something to keep in mind, January 21st and 22nd, our conference here in Crystal Lake, Illinois. If you do intend to attend, give us a call. We'll go ahead and get your name reserved on a seat. Phone number is 800-262-7538. Make sure you call early. We want to make sure everyone can get a room. And if you have to book a flight, of course, the longer you wait, the more you're going to pay for that ticket. So if you haven't given any consideration, it is definitely time to consider. And if you are interested, give us a call as soon as you can so we can reserve a spot for you and get you the information on the hotels. Other than that, it's really watch what happens in the dollar here. If you want to know what direction the commodities are going, keep an eye on what's going on in the dollar and any international news that's going to move it. You have issues out in Europe with the banks right now, countries that are looking for bailout money. You got students rioting in England, all sorts of geopolitical issues right now that will have an effect on the U.S. dollar index. So pay close attention to the news. Call your broker here at Allendale. We'll keep you up to date as to what's going on as best we can. And just watch that dollar for commodity directions. That seems to be the roadmap right now as to what to expect, to look at a dollar chart. Again, you have questions, call us 800-262-7538 or visit us on the web, www.allendale-inc.com. Have a great day and good luck trading this week.